Tom Lydon, CEO ETF Trends, joins us now to talk about the action that we have seen in ETFs, which in fact have performed this year beautifully and lots of flows without a doubt. Tell me more about some of the trends you've been seeing and how that could or could not continue into 2022.
Yeah, it's funny, Nicole, as you and Jill were just talking about, Americans are resilient. They're not only buying, but they're actually buying more in their portfolios as well. But this year's been a little bit different than last year. It's been a lot more on the equity side, a little bit more concerned on the fixed income side as we see hints of inflation. And we know that inflation and rising rates are not good for the bond side of your portfolio. We're surveying advisors all the time, and inflation is the #1 concern. So we're seeing money shift actually to the short duration side or even cash. There's a record $7 trillion in money market funds today. And the Barclays Agg, the benchmark of the bond market, is actually down 4.5%. So among the advisor community and those pre-retirees and retirees, they're actually more concerned about the bond market than they are about the equity markets today.
It's amazing how, as you said, tips have been very popular as an inflation hedge. Some of the trends from 2020 where there was more fixed income, now there's more equity. Value earlier in the year turned to growth. So people really wanted to make some money. And you saw a lot of new investors too. And they love ETFs because they feel like they're a little more diversified, right? Well, I mean, that's one of the advantages of ETFs.
Well, that's it. And you know, when you add in rock stars like Cathie Wood, who's gone from $5 billion under management to $55 billion, and all the excitement about the companies that they invest in, there's a little out there for everybody. And I think one good point on the equity side, last year, the S&P 500 was challenged because the FANG stocks really didn't keep up with the work from home stocks. Fast forward to today, it's quite different. The highs that we saw in the work from home stocks in February, they're still off of those highs, but the FANG stocks, the Microsofts, the Teslas, that are those heavy cap weighted stocks
yeah.
we see in our major market indexes like the S&P and the NASDAQ 100, they continue to push higher where we're in breadths of all-time highs.
Yeah, absolutely. And then I'm curious, I mean, you must get a lot of phone calls as you know, with the volatility in the market sometimes. And as you noted, a lot of people move to cash or they have some cash ready to go. Tell me a little bit about what you tell them or where you think they may be looking for to put more cash to work.
Well, especially for younger investors, these are one of those opportunities. We saw Cathie Wood talking today that she's fearful because we've seen some correction in those disruptive technology companies or the work from home stocks that people might hit the ripcord. These are buying opportunities. You know, even if you're retired today, there's a good chance you're going to live another 25 or 30 years. So these are buying opportunities going forward. And the safe side of the market, the fixed income side of the market, is probably the most dangerous part of the balance sheet that we've seen in 30 years after 30 years of declining rates. So people have to understand that. A lot of money is not only shifted to cash, but also on the fixed income side, moved over to dividend-oriented plays, even enhanced income or alternative income strategies like energy strategies or options overlay strategies that kick off some pretty good yields and also have an equity play as well. So there's a lot of choice on the ETF side as we just crossed $7 trillion and a record $750 billion in new money this year.
It's so exciting. And you talk about the commodity asset classes as well. You know, notably gold, which got to that 1,800 a troy ounce, but it's really been pulling back of late, the last 4 or 5 days. I mean, in fact, it's the longest losing streak that we've seen since March for gold. It hasn't necessarily been participating or rewarding its investors, but Bitcoin, on the other hand, you noted some of the products that we have for ETFs, which don't actually hold Bitcoin, folks, right? They trade the futures of Bitcoin. Have those been in demand? Tell me what people call and ask you about that.
Yeah, well, first on the commodity side, you're right. Gold has been the stinker out of all the commodities asset classes for sure. And I think a lot of that is because a lot of the commodities that have been appreciating because we use them. We don't necessarily use gold in building or manufacturing, but gold tends to be a second half player during extended inflationary times. So take a look into the future for that. And as far as future-based ETFs, boy, BITO, which was the first one launched by ProShares, got $1 billion in a matter of days, which is pretty impressive. The bottom line is there are a whole slew of investors out there, Nicole, that would like to buy Bitcoin via their Schwab account or their Fidelity account or their TD account, right? Where in the past, it really hasn't been available. Now it is in a futures wrapper. Many are hoping that there'd be a spot Bitcoin ETF accepted by the SEC as we get into 22. Jury's still out, we'll see, but fingers crossed, it would be great if that would happen as well.
Yeah, are you okay? I got to go, but I mean, are you okay with trading these in futures? I had one guest come on and say, I don't like this. I don't like the idea of these ETFs that trade Bitcoin futures.
Right now, they're doing exactly what they're supposed to do. They're trading tight, the volume is good, everything is great. Happy Thanksgiving, Nicole. I hope you get that Nordstrom's gift card that you're hoping for.
Oh, well, okay. Anything. I'll take anything. You know, I'm a happy person, Tom. I'm happy to speak with you, and I hope you have a beautiful Thanksgiving with you and your loved ones. It's great to speak with you. And as Tom said, the opportunity is now for a lot of those young folks. We appreciate it. Tom Lydon, thank you very, very much. Good to see you. CEO of ETF Trends. Thanks, Tom.
Thanks, Nicole.